Welcome to Financial Repression Authority's Roundtable Insight, where the best fund managers, economists, and industry leaders discuss the key investment issues and challenges in the current macroeconomic environment.
Welcome to FRA's Roundtable Insight. This is Richard Bhandari. Today we have Ronald Peter Stoeferle of Incremental and Jayant Bhandari, a consultant who is traveling the world for investment opportunities. Ronald is the managing partner and investment manager of Incremental. Together with Mark Ballack, he manages a global macro fund, which is based on the principles of the Austrian School of Economics. And Jayant advises institutional investors about his finds as he travels the world for investment opportunities, particularly in the natural resource sector. Earlier, he worked for 6 years with U.S. Global Investors in San Antonio, Texas, a boutique natural resource investment firm, and for 1 year with Casey Research. Welcome, gentlemen.
Good evening. Hi, Richard. Hi, Jayant.
Good afternoon, Richard.
Great. The big topic that we'd like to discuss is about India, in particular, the demonetization happening there in terms of effectively the war on cash and what's happening to gold, the price of gold, possession of gold. We've talked a little bit about this in the past, and Jayant, you've been to India recently. Could you give us an update?
Hi, Richard. Richard, I'm currently in India. The situation in this country is absolutely chaotic. They are still, after 5 weeks of declaration of this demonetization, the lineups outside the banks are huge. People are getting desperate. And every single small business person I have met so far tells me that his business is failing. They keep telling me that anything between 20% to 80% of the revenue is down. Anyone who has run a business knows that even a 5 or 10% reduction in revenue results in a business is starting to start making losses. That is happening. Poor people can no longer find jobs and they are getting laid off. The whole is as if 80%, 88% of the blood of a human body has been taken out of the system. They have declared 88% of the monetary value of the currency in circulation illegal, and that has created all this desperation in the society today.
And also, I understand there's been reports that when somebody purchases something, they may not get change in return for the payment, and therefore it's causing effectively inflation. Is that correct?
Well, it depends, Richard. Most of the money that the banks are issuing right now are 500 and 2,000 rupee notes. And the smaller denomination banknotes have gone under the carpet right now because people perceive those to be the safest instruments. As you know, bad money drives out good money from circulation, and that is currently happening. So if you go out with 2,000 rupee notes, people don't want to accept it. And if you want to use them, they want you to buy enough stuff to pay for 2,000 to pay for closer to something like 2,000 rupees. I don't think it is necessarily causing inflation. There has been deflation in most of the things that we buy. The reason is that the poor people are not competitors in terms of buying. These people are going hungry, and people are mostly abstaining from buying things that they don't necessarily need right now. So that is the situation right now. I don't necessarily think it's causing inflation, except in gold price, because savers do want to buy as much of gold as possible. But of course, that market has gone underground because of the problem and the risk now associated with the government.
And what's happening exactly is there are there any imminent regulations on forbidding gold to be owned or restrictions on levels of imports?
Well, they have had restrictions on imports of gold for the last many years now. But the reality, Richard, is that rules and regulations and constitutions are pieces of paper in this country. Even the Supreme Court seems not to really understand those things anymore. What the government comes out, whatever government says, whatever their mood is the latest regulation. And the government has made it very clear that they don't want people to be found out with too much gold. A married woman with more than 500 grams of gold can now be assessed for tax according to what Modi has just said, which means that, and they have clearly mentioned that this is about jewelry, which by implication means that anyone who owns more than 500 grams of gold, if it is a non-jewelry form, might be perceived as illegal and could be assessed for tax, which of course automatically means a huge amount of bribes and troubles from the government.
And Ronnie, your thoughts on this? You've written in the past on historical examples that are similar to this.
Yeah, of course.
Yes.
Gold is the current currency of freedom, and Howard Buffett actually said, that the father of Warren Buffett, he said, when you recall that one of the first moves by Lenin, Mussolini, and Hitler was to outlaw individual ownership in gold, you begin to sense that there may be some connection between money redeemable in gold and the rare prize known as human liberty. And it basically says it all. There have been quite a lot of historical bans on gold ownership. Roosevelt, of course. We have seen that also in the Weimar Republic, in France, in Great Britain in the 60s. We have seen it in the Middle Ages and so on. So I think all those crazy things going on now in India are just a very strong sign that financial repression is getting stronger and more aggressive. And therefore, I think I talked to Jayant 2 weeks ago in London about that, and he said that this will probably continue to be in the news for the next couple of months. And I think that Jayant is one of the most interesting guys to talk to regarding those topics. His articles on Acting Man, I think they're a must-read. And I just had a conversation with an institutional asset manager in Austria last weekend, and he said all those microfinance funds that beloved by institutional players in the last couple of years.
Yes.
They are all going belly up.
Wow.
Because of the cash ban in India. So there are many unintended consequences, and those unintended consequences tend to hit us only with a longer delay.
And Ronnie, do you think that this could spread to other countries around the world as they consider to move to like a cashless society, or just from basic financial repression, unintended consequences?
Well, the war against cash, it's already going on, and Jim Ricketts said, "Don't worry, the war on cash is over, and the government won." So I think the things going on in India are probably the most drastic measures, but we're seeing so many similar measures all over the globe. You know, we all know that the traditional arguments against cash, its costs, is which is most ridiculous. Cash is a medium spreading germs, and it's dangerous. Then, of course, it's an impediment of corruption, funding of terrorism, money laundering, tax evasion. But at the end, it's the leeway for the imposition of negative rates and the closing of the emergency exit. That's what it's all about.
So basically, you're saying as negative interest rates get implemented in different jurisdictions, that the necessity of doing away with cash would lead to issues on gold as well, and similar things to what is happening in India?
Yeah, I mean, it's going in that direction, but it just takes a bit longer. For example, in Germany, there's massive political pressure against a ban on cash. It seems that there's the lobbyists are a bit stronger, but we're slowly getting there, but we're getting there. And I think that if people should lose confidence in fiat currencies, then of course there will be some consequences for holders of gold.
And would gold still be a viable investment in those circumstances, in the extreme situation, or maybe should one go to diversify into silver instead?
I think we're still far away from that, because at the moment, for some reason, the confidence in the US dollar and many other fiat currencies is pretty strong. Of course, if something like that happens, people will find ways around. The black market in gold will be very strong, as we're seeing it in India now, of course. People will switch to silver. As you can see at the moment, Bitcoin is making new records, and that's for obvious reasons. So I believe in human creativity, and I think when the shit hits the fan, people tend to become really creative and innovative.
And Jayant, your thoughts on this as well. Do you think this phenomenon in India could spread to other countries or other jurisdictions?
Well, firstly, Richard, this will fail in India. The reality is that India does not have the infrastructure to go cashless in the first place. What the government of India is trying to force, as Ronald said, what they are trying to do is to force as much of cash as possible into the banking system so that they can go more negative yielding than they currently are. India has always been a negative yielding society. Now they are making the society more negative yielding by forcing the cash to go into the hands of the government, and by forcing people to invest in two instruments that the government likes. Now, the problem is that this will not work. None of these things will work. It will destroy the economy, and people will try to find ways around it. It will take a few months. So, in my view, the end result will be that the gold consumption will go up. In my view, it has already gone up. The only thing we don't know is that we don't have the real numbers with us, because most of the gold market has gone underground. But the high price of gold that we currently see in India shows to me that there is a huge demand for gold right now in the country.
Mm-hmm. Turning to the U.S., we have the new president-elect Donald Trump, and he has some interesting things to say about trade, what he has plans for, also on infrastructure spending. How is this all going to play out in terms of potential inflation in the U.S. and elsewhere in the world? Ronnie?
Well, I think it's a huge divergence that we're seeing at the moment. Basically, Donald Trump achieved what the Federal Reserve didn't achieve for ages, meaning a significant increase in inflation expectations. So many commodities like oil, like copper, like zinc, and so on, coal, of course, are screaming inflation at the moment. While on the other hand, gold and silver are basically screaming deflation. And in fact, our inflation indicator switched to disinflation a couple of weeks ago. So from my point of view, the enormous strength in the dollar, the heightening of the Federal Reserve, as well as the significant rise in treasury yields. This is incredibly deflationary. We should not forget that on bond markets in the last couple of weeks, 1.8 trillion US dollars in value, of course, in paper value was destroyed. But this is clearly deflationary, and I just don't think that all those Keynesian programs that Donald Trump wants to implement, that they will be successful. I don't think that he's a new Ronald Reagan, because the setup is just completely different. When Reagan started, government debt was 30%. Now it's 105%. When Reagan started, we saw falling yields and falling interest rates. Now we're seeing the opposite. And when Reagan started, the PE of the S&P 500 was 7, and now it's more than 20. So I think all those pundits saying that Trump is the new Ronald Reagan, I think they don't know anything about history. And so I think that the US will hit a recession next year. I think that's a very contrarian call, but I'm pretty certain about that.
Yes, and given the rising yields on bonds, on medium to long-term bonds, that is indeed raising the price of money. So it will be very difficult for the borrowing of the funds necessary for infrastructure spending. But could that in turn make monetary stimulus go even into a higher level, hyperdrive, to try to compensate for the deflationary forces?
For you, for me, or for Jayant?
Either one. Go ahead, Ronnie, first, if you want to give your thoughts. Yeah.
Jayant, I want to hear your thoughts on that.
Well, in my view, Ronald and Richard, it's so difficult to really know what the politicians are actually going to do. What they say and what they actually do are two completely different things.
Yes.
Most importantly, even if they want to do the right things, the problem is that the bureaucracy, the institutions might not really want to follow the directives of the politicians. Now, the only thing, in my view, that you can reduce financial repression is by reducing regulations. Infrastructural spending won't work. It will only be inflationary, because this is always a waste of resources unless you actually reduce regulations. I'm not sure how good Trump will be in terms of reducing regulations, and that is where the key is.
And Ronnie?
Yeah, well, I think that people and markets are just overestimating the immediate effects of all those stimulus packages. Because if you want to build a big, highway, airport, new train lines, whatever, you have to go through all the legal process. You have to set up the whole project. It takes 1 or 2 years at least. So I think it's a bit naive to believe that all those infrastructure packages will have an immediate effect on the economy. I think, of course, confidence is getting better, and that's something positive. But I think that's on a very, very thin ice. And in fact, having a look at employment numbers, for example, the U.S. in the last 4 years, it created 430,000 new jobs, mostly waiters and low-paying jobs, while in the manufacturing industry, more than 70,000 jobs were destroyed. I think this whole reindustrialization of the U.S., that's a nice story, but it just won't happen that quickly, if it's gonna happen at all. So I think that honestly, we said on many occasions and many conferences that Donald Trump will win. We honestly did not expect markets to react that way. We thought that gold would go higher and the S&P lower. However, it happened that way, and the market is a maximizer of pain. But I think so far what we have seen from Donald Trump was very disappointing, because everything or most of the things that he promised during the campaign, he basically broke within a couple of days. And I'm not very confident that his minister and all his stuff will really bring big change to the positive. So I think that there's way too much confidence in the market at the moment, and that greed is much bigger than fear at the moment, and that will change.
What about what's happening in Europe and how that could affect the financial markets? If we look at the banking crisis now in Italy with the likes of banks like Monte Paschi di Siena, oldest bank in the world, and all their problems. I mean, is money leaving Europe and heading into the U.S. stock markets?
Well, everybody is bullish on the U.S. these days. I think this is the time of the year when everybody is writing and publishing it's the forecasts for next year, and the strategists are really busy. And I think that 90% will say overweight U.S. equities, bullish U.S. dollar, and so on. And of course, you can make a strong case for the U.S. and especially for the U.S. dollar. But what's the consequence going to be of a very strong dollar? The consequence will be the weakest link, which is normally emerging markets. They will suffer big time, and that will come back like a boomerang to the U.S. economy. So I think a strong dollar is actually pretty deflationary, and nobody really wants a strong dollar. On the other hand, what's happening in the Eurozone, I think it's really interesting. In Italy, for example, UniCredit said a couple of days ago that there will be a capital increase. They have to do a capital increase, I think 13 billion euros, which is slightly more than the current market cap. So huge dilution going on. And what did the share price do? It's up 40%. So it's just crazy developments going on, and it seems that everything is just flipping to the other direction that it should normally be heading to. So yeah, I think that the whole 2017 year will be a very political year. We've got elections coming in France and of course in Germany. So everybody will be busy promising stuff that he cannot really hold, but that's politics.
And Jayant, given your travels around the world and a new Trump administration, how do you see the effects on the economy and the financial markets, in particular, potential capital flows into the U.S.?
Well, Richard, I continue to be more optimistic about the US compared to elsewhere in the world. And the reason is very simple. Emerging markets haven't really done very well. They have copied Western technology over the last 20, 30 years, and they haven't really developed their inner capabilities to develop their own technologies. The result is that most of these countries, except for the Far East, Asia, is stagnate. These people consider US dollar to be gold. And that is one big reason why they buy properties in the US and in Canada, why they like to keep a lot of US dollar in cash with them. And I think this trend will likely continue. I also think that Trump will be good might turn out to be positive in terms of controlling migrants flowing into the US. Migration problem has been huge in Europe, and I think it's almost a suicide being conducted by Europe in terms of allowing so many people into their continent. And if Trump can succeed in controlling, I have slightly positive opinion about what I have heard from Trump. But again, the problem is that what politicians say and what they do are two completely different things.
And what about the effects of from what's happening in the pension funds? Do you think that governments and central banks, both from a monetary stimulus perspective and a fiscal stimulus perspective, are intentionally trying to ensure financial markets to be propped up in order to avoid a pension fund crisis? Gentlemen, starting with Ronnie.
They will try to. The big question is if they really will be able to keep it under control. And we can see, I think the biggest monetary experiment going on nowadays is in Japan. And we can see that the government or the central bank is basically totally controlling the JGB market, the Japanese government bond market. And I think the wealth has to be the currency. And the currency, the Japanese yen, weakened dramatically against the US dollar the last couple of weeks. So I think that the more you control, the more fragile everything will be, and the more fragile, the less it needs to get some sort of a collapse. Yeah, the less snowflakes, if you will, you need to get an avalanche. So I think there's kind of an illusion that politicians and central bankers really can keep the markets under control.
Yeah, and Jayant?
Well, the reality, Richard, is that by manipulating the paper market, you can't really create wealth. You actually destroy wealth as a consequence of it. What pension funds and what welfare system really needs is increase in wealth, and the paper market can't really achieve that. It only destroys it. In my view, the problem is that the welfare system is far too bigger than the requirements of the welfare system is increasingly far too bigger than the capability of the wealth creating aspect of the society is. This does not really add up, and in my view, as time progresses, they either have to keep bringing in new people to support pensions, and if not, then this is a paper palace which will collapse at one point of time.
Given all this, gentlemen, this background of what's happening, what can investors in pension funds do for protecting their wealth? What generic asset classes makes sense to consider in this environment? Ronnie?
Well, first of all, diversification is key. I think you should really try to get uncorrelated investments. I think you should diversify out of the system, out of the financial system. I think that counterparty risk will become much more of an issue in the next crisis. We wrote a chapter about anti-fragility, this beautiful book by Nassim Taleb, and asked the question if gold makes a portfolio more anti-fragile. And it seems that really gold has got very, very positive and robust aspects for every portfolio. So in the context of an anti-fragile portfolio, gold definitely makes sense. I think I really like mining stocks on those price levels now. I think the market is disgusted with gold and mining stocks at the moment. I love asset classes like cat bonds that are totally uncorrelated. I think people should perhaps more follow long short strategies and volatilities strategies going forward. And from a strategic point of view, or let's say from a tactical point of view, I really like U.S. Treasuries, 10 years at the moment. I think they're extremely oversold, and I think that there will be a bounce. I don't think that we have already seen the lows in this in yields. And I think that equity markets are massively overvalued, and I expect a major correction, or even more in the next year.
I see. And Jayant?
Well, Richard, I quite like East Asia, China, South Korea, and Japan, Hong Kong, and Singapore in terms of investing money. I think some of these markets are very undervalued as well. I like Chinese currency as well. I think you're the enemy of your friend, and Western people should look at China to invest in, to keep some of their cash in. So should they look at Hong Kong and Singapore for keeping some of their cash and some of their wealth in. I think people should own a lot of gold as well, and they should consider storing gold in places like Singapore and Hong Kong because of the respect to private property that these countries still offer. I think it's also worth looking at New Zealand and Australia as a possible places for diversification. These two are still Western civilizations, Western societies, and they are relatively less affected by the social problems currently happening in Europe and North America. So this is the general area I look at. I would mostly avoid rest of the emerging markets just because I see a lot of implosions happening in the emerging markets in Africa, Middle East, South Asia, most of South America. I think they are not really fun places to invest in.
Great. And just to end our discussion, gentlemen, how can our listeners learn more about your work? Where can they find more information, Ronnie?
Well, of course, on our webpage, incrementum.li. LI stands for Liechtenstein. We're based in the beautiful country of Liechtenstein, probably one of the safest jurisdictions in Europe. We've got plenty of research on our webpage, information about our In Gold We Trust report. We've got a research distribution list totally for free. We wrote a book called Austrian School for Investors, investing between inflation and deflation. So they are very much research driven, and quite a lot of that research is on our webpage.
Great. And Jayant, the last word.
Richard, they can go to my website, jayantbhandari.com, and I post and link everything I write and speak on my website. I particularly want to draw your attention to articles I'm writing every week for Acting Man on the demonetization that's happening in India, and why I think 2017 will be story of India. India will enter a major phase of crisis, and that will be very important for the world to pay attention to. Jayantbhandari.com is my website.
Great. Thank you very much, gentlemen. Great insight.
The FRA Roundtable Insight Show is for informational and educational purposes only and should not be considered as a solicitation or offer to purchase or sell any securities. The investments, investment strategies, and investment philosophies discussed or presented on the show each involve their own unique risk factors which are not discussed on the show. Any discussions among the panel participants or responses to listener inquiries are based on the personal opinions of the panel participants and do not take into consideration the listener's suitability, objectives, or risk tolerance. Please be advised that you invest or speculate at your own risk.